Today marks a turning point in global finance. Crypto Week is underway in the U.S. House of Representatives, positioning cryptocurrency law at center stage for the first time. Three landmark bills, the Genius Act on stablecoins, the Clarity Act defining regulators, and the Anti-CBDC Surveillance State Act, are under debate. As this unfolds, Bitcoin has surged past $123,000, a new all-time high that reflects intensified investor faith. This is not just a headline, it's a tectonic shift reshaping how money works, and you're witnessing it live. The surge in Bitcoin isn't random hype, it's backed by real traction from institutional capital. Major ETFs are attracting billions, while corporations like MicroStrategy and others continue to accumulate. This isn't a fleeting trend, it's strategic long-term positioning in anticipation of regulatory clarity. When smart money commits, markets listen, and the surge is proving that crypto is moving from fringe to fundamental. At the heart of this movement is the Genius Act, which seeks to bring transparency and reserve requirements to stablecoins. Imagine a world where you pay for coffee or groceries with regulated, audited digital dollars. That shift could bring crypto into everyday life for millions. We're on that threshold, and the outcome of this bill could light the fuse. Meanwhile, the Clarity Act and the Anti-CBDC bill will set the rules of the game, which agency regulates tokens and whether a government digital dollar is allowed. Together, these measures could provide long-sought certainty for everything from startups to investors. If passed, these laws will mark the first real regulation for crypto in U.S. history. On another front, the White House's Strategic Bitcoin Reserve, announced this spring, is already being built, with the U.S. government now holding roughly 200,000 BTC and significant reserves of Ethereum, Solana, Cardano, and XRP. This isn't theory, it's institutional policy. With that move, Bitcoin is no longer just an investment, it is now a strategic asset. Meanwhile, Wall Street's attention is shifting. Major banks like JP Morgan, Goldman Sachs, and Bank of America are releasing their Q2 earnings this week. Markets are watching for trading revenue performance, loan provisioning, and consumer confidence signals. These reports aren't just numbers, they're a snapshot of the real economy and directly influence investor sentiment across stocks, bonds, and crypto. Meanwhile, the latest inflation update from June shows the consumer price index ticks up to 2.7% year-on-year, with core inflation at 2.9% and a 0.3% monthly rise, the fastest since January. Tariff-driven goods like furniture and clothing are pushing prices higher. The Fed is now facing a tougher decision to cut rates or hold steady. This impacts everything from mortgage rates to corporate borrowing and your own investment strategy. Trade tensions are heating up. The U.S. has announced a 30% tariff on imports from the EU and Mexico, and threats loom over Russia and Japan. Yet markets remain steady, the dollar stays strong, stocks hold ground, and crypto presses higher. That resilience demonstrates a changing narrative. Digital assets are increasingly seen as inflation hedges and safe havens in uncertain times. Hedge funds and alternative money managers are recalibrating their allocations. With bank stocks under macro pressure, capital is shifting toward defensive assets, but crypto-related plays like Coinbase and Marathon are outperforming as Bitcoin surges. The pivot is visible. When traditional markets waver, crypto becomes a beacon for yield and growth. Even treasury markets are feeling the ripple. The U.S. plans to issue over $1 trillion in new bills, but demand remains strong, showing confidence in government debt. Yet, savvy investors are balancing short-term safety with high-growth opportunities in crypto. This balancing act between bonds and blockchain is now at the heart of smart portfolio strategy. Ethereum is reclaiming its momentum, rising above $3,080 with renewed strength. Unlike past speculative rallies, this wave is built on fundamentals. Transaction volumes are climbing, Layer 2 integrations are driving real activity, and ETH staking remains attractive with improved liquidity and reward rates. As institutional investors diversify beyond Bitcoin, Ethereum's unique position as the foundation for smart contracts and DeFi makes it more than just a hedge, it becomes essential infrastructure. Decentralized finance itself is experiencing a revival. Avi, Compound, and newer protocols are collectively surpassing $70 billion in total value locked, a 12% increase over the past 2 weeks. This growth isn't just token speculation. Users are engaging with real financial tools, from lending to perpetuals. What's more striking is how these platforms are improving user experience, minimizing risk exposure, and increasing transparency. DeFi is not just back, it's evolving and it's becoming too useful to ignore. NFT markets, once declared dead, are starting to rise quietly. Collections like pudgy penguins and mutant apes have seen floor prices double over the past 10 days. But this time, the narrative is different. It's not about hype, it's about integration. NFTs are now being used for real-world utility. Access passes, token-gated content, event tickets. The technology is being reborn as a tool for digital identity and value, not just pixel art. Meme coins, often dismissed by traditional investors, are also signaling shifts in sentiment. Shiba Inu's price spiked after the burn rate increased by 50% in a single day, while Dogecoin saw a 7% jump amid rumors of integration with a new Elon Musk platform. These coins act like emotional barometers. When retail investors are back, liquidity returns, and the broader market moves with them. It's not just memes, it's crowd behavior on-chain. Globally, regulation is accelerating. Japan today announced a framework for licensed DeFi institutions, while Switzerland's central bank revealed internal debates about holding crypto reserves. Kazakhstan has doubled its state-owned Bitcoin holdings. These moves show that digital assets are being treated as strategic tools in national financial planning. This is the moment when crypto is no longer countercultural, it's geopolitical. Institutional adoption goes deeper. BlackRock just submitted new filings indicating interest in tokenized U.S. Treasury bonds, moving stable instruments onto blockchains. Meanwhile, Fidelity is piloting crypto 401k options for select clients. These aren't headlines, they're tectonic movements. When trillion-dollar firms build inside Web3, it's not speculation, it's structural commitment to the future of money. In tech, the convergence of AI and blockchain is producing seismic innovation. Several protocols now offer decentralized AI compute marketplaces, enabling users to rent out GPU power via smart contracts. This model creates new economic incentives and reduces monopolistic control. Imagine training powerful AI models without relying on a single tech giant. This is a vision of an open-source, decentralized intelligence network. AI-generated investment strategies are also gaining traction. Autonomous trading bots powered by machine learning are executing on-chain strategies, adapting in real time to sentiment and volatility. While these tools are still young, they represent the next frontier, self-evolving finance. The edge is no longer speed, it's intelligence, and those who understand the tech early will be the ones who lead the portfolios of tomorrow. Back in the US, retail investors are returning. Coinbase signups are up 38% in the past 7 days. Robinhood saw its highest crypto volume since 2021. Google Trends data shows a spike in searches like how to buy Bitcoin safely and best crypto to invest July 2025. This isn't a meme-fueled rush. This is cautious optimism built on a belief that the worst is behind and the opportunity ahead is real. Finally, the culture is catching up. Financial influencers, TikTok analysts, and YouTube educators are all shifting tone from fear to foresight. Even mainstream finance shows are covering crypto with a new level of seriousness. When the narrative changes, everything else follows. Investment, adoption, innovation. We are not entering a bull run. We're entering a rebuild. And this time, the foundation is stronger, smarter, and more global than ever before.